Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the closing action on the D Street. Well, still holding on to that 22,000 mark, but we are still down about 25 odd points as far as the Nifty is concerned. Looking at the market breadth, when we look at several of the sectors that are still trading with pain are auto, IT, FMCG, pharma and the private banks, but the rest of them have managed to pull up into the green. Media stocks are higher in trade today. PSU banks are 1.5% up. Broader markets, small caps especially, are seeing some recovery. You have a 0.8% of an uptick on this one. Oil and gas, consumer durables, metals and realty are some of the other stocks that are managing some green at this point in time. Top movers on the stock markets in the closing hour. On the Nifty, you have BPCL up 3.2%. You have BEL, State Bank of India, Shriram Finance and Adani Enterprises as the top 5 movers. Whereas on the downside, you have some auto stocks like Hero Moto, Bajaj Auto, Eicher Motors. You also have HCL Technologies and Bajaj Finserv as some of the other stocks that are still dragging in trade. So very, very select pockets and stocks that are up and about in trade. But what has really caused this kind of a weakness in the markets, and that's something that we really need to find out. And of course, today's bigger trigger was a global trigger. We saw massive overnight sell-off on the US markets, followed by Asian markets opening weaker, and this was all happening with Mr. Donald Trump, finally announcing tariffs on Mexico, on Canada as well as on China as well. Now the big question is that are these trade wars going to be further intensifying? What if it intensifies further? What will it mean for Indian markets and economy? That's what we will try and understand. Let's welcome our top guest this afternoon. With us, Mr. G. Chokalingam joins in. He's a veteran market expert and he's from Economics and he joins us frequently. Warm welcome to you, sir. Thank you so much for taking the time out. Just like I mentioned, I think the biggest question right now is that finally the trade war is on now, at least with 3 nations competing with US. We had retaliatory talks from both Canada as well as China also coming down with heavier tariffs on American goods as well. So this actually means at least 4 nations are competing with each other when it comes to trade war. What does it really mean? Of course, globally, the economy is something which is susceptible, but particularly for India, what does it mean, sir?
Yeah, certainly. Uh, Definitely, India cannot be expected to, get exempted from this meltdown, which was caused by tariff war. Uh, but I believe our markets have overreacted for this trade tariff war. Of course, apart from tariff war, it was also due to the bubble in many small and mid cap stocks. Now, coming back to the global event. Now, you look at the history. If you look at the history, definitely US cannot prolong with this trade war for even medium term. I mean, even 6 months to 1 year, it is very difficult for US to carry on. Obviously, they needed this tariff protection because their trade deficit is widening. China alone generated $361 billion of trade surplus from doing trading with US in calendar year 24. So at that rate, the day will come, China can even generate $1 trillion of surplus from US alone. That would weaken in relative terms US economy, which would be in great difficulty. But however, options are limited for the US economy also. They cannot continue forever because if you look back the history, so whenever the trade was increased, it brought down the global growth. So including the US economic growth. And then there are 2 interesting data points which have come in the last 1 week from US economy as per the global media, reported media. One, the consumer spending started going down as the cost of imported goods, inflation is going up. And second, very interestingly, like India, like SME, MSME, how they contribute in India, it is reported that almost half of the businesses are done by the small businesses. Half of the economic activities are from the small businesses in manufacturing in US. And they already reported, the narrowing down of margin and the difficulty of meeting the input cost. So definitely, within a couple of months or so, the momentum on trade war has to come down. There is no doubt at all. Second, what the Indian investors need to keep in mind whenever there was a global pain. If market has fallen because of our own pain, that is different from market falling on account of global pain. The single most important insight and historical evidence and logical point is that whenever global pain is severe, the oil price becomes the victim. As I am speaking now, the oil price is already down 22% from the 52-week high. So this is what helped in all the global pain, whether it was a dot-com bust, whether it was a 2016 early global deflationary conditions or COVID time, the oil price crashed. We roughly import around $140 billion worth of oil. So 20% of oil price crash in a year would mean almost $28 billion, which is probably more than our entire pharma exports, the saving on oil bill. This is what rescued Indian economy several times. So, in a nutshell, I may be absolutely wrong. I continue to maintain my view that by end of this month, the market should bottom out, at least, particularly for the quality stocks in a small and mid cap. The bubble stocks only cost along with the trade tariff for this mess, I believe, and the bubble is not completely vanished. So there is a dichotomy within small and mid cap. There are certain pockets where even now the valuations are stretched compared to their own profit growth. Those are the stocks, they may fall even beyond March. So you have to go by the fundamentals. But the quality stocks also have fallen anywhere from 20 to even 40-50%. I am confident, but because if you look back the history also, whenever first half was very good and second half you had a meltdown, it got tapered off by mid of March itself. It's a logical because all, the booking of losses for tax realignment, they all get over by third, fourth week. So I remain very confident, and that is supported by the fact that H2 GDP growth will be better. Q3 already has reported a better growth, and corporate earning would be better. Crop out would be record level, high level once again, and banking credit still growing in strong double digit. And trailing P has come down. If you knock out Zomato in both Nifty and Sensex, the P would be much far below to the long-term 5-year and 10-year average. So I remain confident. My risk to my view, by any chance the US takes on India as a enemy in the economic domain or monsoon fails miserably, then I would be wrong. Otherwise, I am 100% confident of market recovery by end of this month or in April.
So, in case there are higher tariffs with India also, if the talks, deteriorate from here for India as well, which are the key sectors that you believe will feel the maximum heat from Trump tariffs in India?
See, we actually we are not a serious troublemaker for US economy. So because when China generated $361 billion of trade surplus, ours was not more than 28-30 billion approximately, if my memory is right. In any case, we are very small as compared to China, what China is generating. And
Yeah.
having said that, yes, we will be affected. See, pharma is the one area that is a fear. And second, IT sector is the single dominant source of income from US for us. So there, the tariff war should not happen because we don't have any aggressive taxation on IT services, IT products from the US.
Yeah.
You have around 18% duty, and they also have around 21% tax on income for our IT companies, or GST also similar level. So by any chance, if there is a qualitative restrictions against export of IT services into US, that can cause major problem. And also on pharma, if he is going to implement aggressive import duty on Indian pharma, these are the only two sectors we
Yeah.
should be cautious. But other sectors, I don't think. So that is why, as as a research analyst, I have been suggesting for last few months that focus on the domestic companies which are focused on domestic businesses and which are supported in the stock market by the domestic investors, because the domestic investors equity ownership along with the domestic institutions now has become around 26-27%, whereas FI is around 16-17%. So even if they keep selling, they will be selling large caps and large mid caps. So therefore, I suggest focus on the companies where the domestic ownership is very high and the foreigner ownership is very low, and focus on the companies which do business and cater to the domestic aggregate demand. and not dependent on import or export. So that would relatively be very with minimal risk to address this current problem.
Fair point, sir. Now I want to understand from you, since you are saying and expecting if things go right by March end, at least some of the quality pockets should start to rebound. Which are those pockets that you believe will be the first ones to show signs of reversal, so that in case somebody has fresh funds right now to deploy, that's the space that they should be getting ready to select key stocks from?
But unfortunately, what happens once again when the recovery is solid, the momentum stocks only will move faster than my stocks, value stocks. So I want to say that, and my stocks are only for the investors who
Yeah.
want to have a relatively lower risk. So I would suggest something like a CDSL, which is down
Okay.
almost 45%. It's a fabulous company, I believe. I personally do not hold. CDSL is related to stock market. Once again, the market cycle will come. The investor base is now breached 21 crore, and it has a leadership in the depository participant business. So that is the one stock I have been extremely bullish. And
Okay.
second stock I would recommend very strongly is Nesco.
Okay.
We have personally invested. I still maintain my firm view that Nesco would be the next generation stock. This company has grown the business substantially. It has increased the capex. Despite that, it has increased tremendously the cash position. Now it has diversified outside Mumbai into wayside infra management, and within Mumbai, they have gone to facility management for areas like restaurants, weddings, other music programs. So many now they have proposed to even get into sports complex. So many activities. And why I like this company is management is excellent despite having huge capex. The cash has gone up, and secondly, entire business model is based on the rental income, which keeps growing as inflation remains positive in the country. So rarely we have a negative inflation or zero inflation. We always have a positive inflation. So therefore, rental model would be the best model, and it is entirely depends upon the domestic activities. And third would be Balmalari company. The stock is almost down 50%. A huge dividend yield, lot of cash. Its subsidiary in UAE is doing extremely well. So these are the some of the stocks I believe great value stocks. But I must tell you that whenever solid recovery happens, the momentum stocks will recover faster. But then, when the fall happens, also they fall very badly. So this have to keep in mind.
Absolutely. The other stock that you have mentioned in the past is Indoco Remedies also, sir. And in the last few days, we have seen some strong recovery on this stock as well. Any outlook that you could share again on Indoco?
Yeah, Indoca has about 12% exposure to America. So that is the reason. And apart from that, they posted losses in December. But definitely for a medium to long term, it's a good stock.
Okay.
Uh, because, as I said, US business exposure is only around 12%, and around 50% is the domestic. More than Indoco, I would strongly continue to recommend FDC Limited. 82% of the business is domestic business and cash rich company, and big land bank in the form of R&D center in two places within Mumbai. So both the stocks we have buy recommendation, FTC and Indoco. And I recommend to my clients, I also invest in them instead of investing first and then recommending. So therefore, we also have invested in Indoco and FDC.
Okay, fair point. Mr. Chokalingam, let's also discuss, the small and the mid caps, where you also believe that, there could be some signs of reversal coming in. A lot of excesses and froth has already been taken out after this 21% drop from the highs on the mid caps and 24% drop on the small caps from the highs as well. Any key pockets that you're identifying from the mid and the small caps? What should one's strategy be? Because retail investors' portfolios are largely skewed towards mid and small caps. They have actually, bled the most. But at this point in time, what would you advise them?
Yeah. So one can, as I mentioned, look at domestic companies which do not get pain out of any further fall in the rupee, which cannot be impacted by any further adverse development on the trade war. And therefore, one can look at, I can elaborate this domestic demand. Like, for example, GNFC. The stock is, if you look at a 3-year high, it is down more than 50-55%. And it makes all import substitutes, you know. And though it imports inputs, its products are import substitutes. And which means, as rupee keeps falling, more and more will come to GNFC instead of importing. So that is the kind of stock. And, so similarly, MSTC is a PSU. This stock has come down more than 60%. I don't understand. It's a e-commerce company, cash-rich company, and it has given a dividend of 32 rupees also. And we are also invested in MSTC. And
Okay.
this stock, you know, entirely now makes a lot of profit from the e-commerce. They have developed an e-commerce portal for all auctions. In fact, in the investor presentation, they said that Coal India has come back to MSTC because
Yeah.
they were, they were using their own portal, but then they were more happy with MSTC portal, and then they come back. So such a fabulous stock. And similarly, Coal India, as dollar value keeps rising,
Yeah.
India significant import of coal is happening, and we are losing a lot of forex reserves. And this Coal India is giving you a very good dividend yield as well, and the stock has corrected a lot. So this is another example of a purely domestic play. In fact, again, global media has come out with a fabulous article on Coal India. They say that 5 to 10 years, not on Coal India, sorry, coal as a commodity. They say that next to 10 years, the global demand for coal is going to be very robust. The renewable energy is not enough, and therefore, the Coal India will be a beneficiary. It will be forced by the government to keep maximizing the coal output because we are losing a lot of forex reserves. So these are the, some of the ideas to explain how one can play on the domestic demand theme.
Fair point, sir. I also wanted to ask you about within the PSU pack, the defense and the railway spaces as well. What's your outlook on them now? There have been some signs of a reversal amid some of the stocks over the last few days or so. New orders are continuing to flow in for many stocks within the railways like IRCTC have been given Navratna status too. Do you think the course is changing for these two pockets? Is now the right time to relook at some of them, if not the entire pocket within the railways and defense space, sir?
Uh, Post budget, I am not that bullish on railway and defense. All of us
Okay.
know that budget allocation has not been significantly raised for these two. So, maybe the traders, just because many of them are beaten down. So maybe traders, but for medium to long term investment, I would look outside, these defense and railways.
Okay,
And
fair
one
point.
another PSU stock is Bank of Maharashtra. We do not hold, but this
Okay.
I believe is the best banking stock in my personal view. Net NPA is 0.2%, and yeah, entire outstanding net NPA. If you compare with just one quarterly profit, the quarterly profit is in multiple of outstanding NPA. Theoretically, the bank can write off entire NPA and declare as a zero NPA. I would suggest to the management as an analyst, that will be fabulous. They are in a position to do that, I believe. And
Okay.
this stock also has come down a lot. So I like this stock because it is located in Maharashtra, which is the richest state in the country, and a lot of capex planning is happening in Maharashtra. Fabulous growth in advances and profits in a consistent manner. So this is another PSU stock which I think investors can consider.
Okay, got that. So within the PSU banks, Bank of Baroda is something that you could definitely look at, and that's something that you should be really betting big on as well for the long term. Let's also look at some of the other spaces. You did mention about oil prices, sir. So how are you approaching the entire oil and gas scenario, both upstream and downstream at this point in time? In the US, there is indication that Mr. Donald Trump is pushing for, oil prices to cool down. OPEC may actually look at again starting production. If that glut starts to happen, what happens to the upstream companies back home and the downstream companies too?
Yeah. They move in a range. If oil prices falls very badly, obviously they are affected because oil and gas prices are highly correlated. Gas price also goes down. And if there is a bubble in the oil and gas price, and they are not going to get the full benefit of that. So therefore, to play an oil thing, you can always look at, the users of oil and oil derivatives, and also some of the chemical companies which use oil derivatives. So that would be a better play to, on oil things. So I believe, the tire stocks should be the beneficiary because they use synthetic rubber and other oil derivative like a carbon block, and they will be the beneficiary. And the tire stock entire space has been beaten down, and the automobile sector may grow 1 or 2%. Investors should consider the fact that the automobile population in the last 10 years has gone up phenomenally, and almost 70-75% of the total demand for tire comes from the replacement market, not from the new vehicles. So therefore, yes, they are affected by slowdown in the automobile sales, but the impact is minimal because more than two-thirds of the sales are to the replacement market. So now they will be the beneficiary of this 22% fall in the oil prices. The natural rubber price has not fallen badly recently, but normally the natural rubber price also follows the crude oil price, synthetic rubber price, so it's highly correlated. So this is one space one can play, and another way to play is like a aviation company. I would go
Okay.
with Indigo, the leader. They would be the beneficiary of, because for them this is the single most dominant factor in determining their performance.
Fair
So that is
point.
why Indigo also up. So the Indigo would be a major beneficiary of high price fall.
Okay, got that. Indigo will be a beneficiary, and one can definitely look at Indigo 3% higher even today, 45.99 as the current levels. Volumes are also pretty strong on Indigo as of today, and the stock has been in an uptrend over this last entire one week or so. Mr. Chokalingam, what is the reason behind the pain that we are witnessing in the auto space, and how long do you think that will continue to impact investors' portfolios? I mean, like stocks like Tata Motors, for instance, there's no respite from the kind of fall that we have been seeing. Even if brokerage houses are actually penciling in higher targets, it's not really getting reflected in the sentiment that's completely dampened when it comes to auto space. 1.4% down even today. How are you approaching this one?
Yeah, short term I am negative on auto space. To answer your question, there are multiple factors. One is the base effect. So they had a good run in the last 2 3 years. The base of the sales base increased phenomenally, but on that to maintain strong double-digit growth is a difficult thing. And second, the first half slowdown in GDP growth has impacted. There is a definitely high correlation between overall economic activities and automobile sales. And third reason, there is a structural change. There has been a shift from small car to SUV, all of us know, and SUVs were growing at 30-40%. Now, SUV, that after that kind of growth, that also got impacted by the base effect more than the small cars. And SUV, which was growing at 30-40%, now is growing at around 8% year on year. So that is also causing the pain. Fourth, recent data which tells me that there could be more pain for auto sector is that, as I am speaking, from September peak, the overall market cap erosion is about 102 lakh crore. We had about 484 lakh crore of market cap in September. That was a lifetime record high. After that, 2 3 lakh crore of IPOs also added the market cap. So from 487 lakh crore, we are down to some 384, 385 lakh crore. So around 102, 103 lakh crore of equity wealth simply evaporated. It is very shocking to see that it is 31% of India's nominal GDP. Yes, a lot of economists or even the administrator, not yes, there is a saying, a truth in they are saying that stock market is volatile, it goes up, comes down. We need not worry much. But as an analyst, I would say that you know this 102 lakh crore evaporation of the market wealth would definitely have a demonstrative effect on sectors like automobile, real estate, and the durables. So when you see your equity wealth is suddenly evaporating 30-40%, definitely it will influence. This 102 lakh crore, it was, the loss alone was more than the entire market cap of 84 lakh crore in 2014 May.
Yeah, yeah.
So therefore, my humble request is to consider, reducing the tax on dividend and buyback to
Yeah.
20%. That can help stock market to stabilize. Many governments have done. Chinese government, even recently Singapore government invested money to stabilize. So that's only my humble request. that we can do that to stabilize, because we need to reduce the dependence on the FIIs. The 17% also should be in a single digit, and that would mean promoting the retail investors cult. We already succeeded. The government has done a phenomenal job in promoting many other things. So today we have 21 crore investor base. If this becomes around 40 crore, then we can dream the FI equity ownership coming to single digit. Then we don't have to worry too much on huge market volatility on account of FI selling, huge volatility on the rupee exchange rate. This is my personal view.
Absolutely. Point taken, sir. And we do hope that this is paid heed to. Let's actually look at some of the other stocks which are actually defying the market mood. Consumer durables are back in action, sir. Voltas, Blue Star, they're the ones that are rallying for the last couple of days, Voltas especially. Probably, summer's knocking the doors of North India. Demand as far as, the heat wave is concerned will increase for, air conditioners, refrigerators and many such consumer durables. How are you looking at this space? Do you think, at least in the short to medium term, this is a space that could look positive?
Yeah, short term, these durables related to air condition will make money, because there are a lot of people on the market who will suddenly discover that the summer is coming, demand will go up. Of course, that happens every year, and every year tactically they give some trading opportunity. So for traders, yes, summer is set now. The heat wave will be little bitter, because that is a forecast. The temperature is expected to be little higher this year as well. So, but then you have to be cautious. So go by individual stock valuation ultimately. Yes, across the board there could be some short-term trigger for the air condition companies. But then, the before market discounts, the heat wave and the stock price rise, you should take the profit on the table. Yes, short term it is positive, but medium to long term I will go for individual stock pick rather than just chasing this momentum rally.
Okay, fair point. Well, Mr. Chokalingam, it's always a pleasure to listen to you. Thank you so much for sparing your time for us and explaining to us the current scenario as well as what can we expect going forward from here in the markets where there needs to be continued caution and where there could be opportunities that could be knocking on the doors. So we will be keeping an eye out on both these. Thank you so much. Appreciate your time with us. We are just at 3:30 and the markets have shut shop. It's a mixed close as far as the large indices are concerned. You can see a 22,080 as far as the Nifty is concerned. So we are down 0.2%, 38 points lower in trade. But the good part is that we managed to protect 22,000 on a day like today, when there was scare right when the GIFT Nifty was indicating a start below 22,000. Even in the pre-open trade, there were sharp downticks that were being seen in the initial few minutes, but things settled down. It was a very, very narrow band of trade that we really saw today, but the Nifty bulls kept on protecting the wall of 22,000. Now, how long will it continue to be there, and or will we see a rebound from these levels is something that we'll have to continue to watch out for. The Nifty bank turned green. That was something that was not providing any support as of yesterday. So 0.3% of an uptick, largely led by the PSU banks today that have been the front runners, 1.5% higher, the top moving sectoral index. Apart from this, oil and gas, consumer durables, metals, realty stocks, banks, financials, and even the small caps did show us some reversal in trade. SBI, BPCL, Bharat Electronics, Shriram Finance and Adani Enterprises, the print remains same as we began the show and are ending the show with the top 5 movers on the positive side on the Nifty. On the lower end, auto stocks, Bajaj Auto, Hero Moto, Eicher Motors lose a lot of ground. Nestle was down 1.8%. Bajaj Finserv and HCL Tech were the other top laggards as far as the Nifty is concerned. On the sectoral front, we've already shared, that the positives, but IT and auto were clearly in pain today, along with FMCG and pharma as well. But in the F&O space, you had SJVN that shot up about 7.5%, HPCL, Bandhan Bank, Angel One were some of the other movers on the positive side. PSU stocks definitely did well today with the likes of OMCs and the likes of BHL, HAL, IRFC, IOC. These are the kind of counters that actually pulled up in an otherwise weak setup of the market. Stay tuned, viewers, as we will end the show, but we'll be back at 4 p.m. when we will actually see an interaction on the markets and the mutual funds as to what your outlook should be. So stay tuned. There's a lot more to catch up even beyond the stock market hours.
Welcome to Market Today on the roundup that's happening at around 11 a.m. about 1 hour 45 minutes from market open.